Let me get you. That's a hot subject, so.
I'll squeeze around between the two. Yeah. What was that video of somebody, some famous politician falling off the stage? What was that? During a presidential campaign?
He stepped off the stage, right?
He stepped off and he fell.
Gerald Ford.
Gerald Ford did? Wow, that's finished.
I gave you the music spot.
Thanks, man. Appreciate it.
Camera rolling? Good.
Got the middle
We
seat.
got, we got a great audience at home.
I'm in one end.
See, I have Jillian here. We have everybody. Sorry, I had the tag right there. I should have. All right. Ten 18. Okay. Okay, our next panel, first panel, is a crowdfunding real estate, which is going to be a very, very hot. That's what we have. It's this great panel, and we're doing live broadcasting and for audience for the crowdfund beat live everywhere. Real estate is pretty big, and we saw it, what happened in the past year, and it's going to be exploring. This year is going to be a tremendously hot after. I think peer-to-peer will be a great phenomenon in the real estate. And I'm going to introduce. I'm going to have a moderating this panel with Michael Bull. Michael Bull he's going to introduce himself and tell us what he does about his shows. He's got a lot of followers. Michael.
Good morning. I'm Michael Bull. I'm CEO of Bull Realty, a regional commercial real estate firm based here in Atlanta. We're licensed in 9 states, and we do all types of investment properties. I'm also host of the Commercial Real Estate Show. It's a national talk radio show about commercial real estate related topics. And with that, if each of you would mind doing the same thing, tell us your name, title, and a brief description of your firm so we know who's speaking.
Jonathan.
Didn't know we're coming from this end.
Yeah, go ahead.
My name's Jonathan Wilson. I'm an attorney here in Atlanta with the law firm of Taylor English Duma. My partner Stephen Wright is here today as well. We are 130 lawyers, and our office is just about a mile up the road. I do a lot of work with startups, but I'm a general corporate and securities lawyer and have done a lot of work with crowdfunding as well. I wrote some articles and some mini books for a couple of the crowdfunding platforms. Talking about the Invest Georgia exemption that we have here in our state and some of the other developments. And my firm helped to close the first successful IG offering here in the state, which was a company called Bohemian Guitar. It raised a little more than $120,000. So we like to use crowdfunding with a lot of our clients, and we look forward to seeing it as a growth opportunity for the future.
Jillian.
I'm Jilliene Helman, the CEO of Realty Mobile.
I'm Brian Daly, co-founder and CEO of Ground Floor.
I'm Carlo Tabibi, the co-founder and CEO of Patch of Land, a real estate platform that focuses more on debt than equity.
All right.
Okay. I think one thing that's interesting about crowdfunding and commercial real estate is the timing of the cycle. I mean, we're in a recovery part of the cycle. There's not been much new construction. So all the analysts believe that commercial real estate is going to do well in the next several years. And I'd like to see if someone on the panel or a few people would like to comment on really the timing of crowdfunding commercial real estate and the growth that you expect.
So I've been involved in real estate pretty much my whole life. I've been constructing houses and building office buildings and managing different types of real estate throughout the USA. And I've basically watched the up cycle and the down cycle of the real estate market for the last, I guess, 2 cycles. And it's been an interesting time the last few years. In fact, in 2006, I sold all of my real estate assets just before the market collapsed, so it was great timing for myself. And where it's going to go today, it's an upcycle, but the rate of the economy is growing is fantastic. Interest rates are low. Who knows what will happen in the next few years when interest rates go up, and that'll obviously have an effect on the pricing of real estate, because cap rates will probably go up in tandem with rate increases at the Fed. So the next few years are going to be interesting to watch, and I think the fact that the crowdfunding industry of real estate is happening now is a great place to be, because as the real estate cycle is on an upswing, we're in a safe place to participate. Obviously, as things turn for the worse at some point, and they will do, we all have to make sure that we position our companies and the deals that we have on our site to work as well in a down cycle. So we've got to have equity and debt that will be secure and safe, and that's what I think is going.
Yeah, I think that we've got great timing today, but we are a little more pessimistic about the future and how we're making investments today, or rather the types of investments that we're providing on the platform for investors. We think that there will be another recession, and we spent a lot of time talking about this at investment committee and determining what is our criteria for a real estate company to post their transaction on our platform. And what that has led to is us offering up opportunities in what we think are counter-cyclical investment opportunities, or opportunities that are going to bode better in a recession. So an example of that is self-storage. We're really bullish on self-storage. We closed on a 2,400 unit self-storage transaction in North Carolina, actually, and that's typically a counter-cyclical type of investment. Another big investment that we've made is into mobile home parks. So great cash flowing assets, great real estate. Well, not so great real estate, actually. They're typically not, Class A, beautiful mobile home parks. They're mobile home parks, but at the same time, they're counter-cyclical. And you've got millions and millions and millions of people who can't afford a single-family home. They can't even afford an apartment, and so we're pretty bullish in the mobile home park space. Another place that we're investing because of this thesis that we think that there's a potential for another recession is in sort of durable goods in retail. And also service retail. So when you think about the impact of the internet and Amazon, where you can order anything essentially, you can order toilet paper off of Amazon if you want to. We're looking at what type of retail is going to stay around, and we're looking at medical, we're looking at veterinarian clinics, karate studios, stuff like that, which you've got service-oriented retail that tends to fare decently well. But this idea of where are we in the real estate cycle is something we spend a lot of time talking about at our firm. We're very concerned about multifamily right now, and it'd be interesting actually to hear your opinion on multifamily specifically, Michael. But we've seen about $2 to $3 billion in deal flow in the last 12 months. We see a great deal of deal flow, and we're seeing a lot of people overpay for multifamily, and we don't allow it on the platform. Not that we're geniuses, but there's minimum criteria to get on our platform. So we're really concerned about multifamily. That doesn't mean that we're not investing in multifamily. We are. But it just means that we're careful about what opportunities we're showing in the multifamily sector.
And I like multifamily. I think the demographics are there with millennials, and of course every deal comes down to the actual property, the actual project itself, and it also comes down to the sponsor. So if you will, on the panel here, speak to how you handle finding these projects and the sponsors, how you vet the sponsors that are doing these transactions that these investors are investing with.
Brian?
Yeah. So we've been, Jilliene talked about the difference between innovating and inventing. We feel like we've been inventing a little bit. We're really one of the only platforms that has been foolish or smart enough to offer micro-lending as an option to non-accredited investors. We've been doing that here in Georgia for the last few months. We piloted that concept, and like any new technology. I mean, my previous startup before this was was not, and I'm unique up here in that I'm not a real estate person. I'm a technology entrepreneur, and the previous company I started was Republic Wireless. It was a hybrid cell phone carrier that also did something that sounded kind of foolish that nobody would buy. When you're innovating, you need early adopters early in the cycle. I love how Jilliene described that during her talk at the beginning, because you need people who are true believers. And so at this stage with non-accredited investors, the non-accredited investor business is, at least a year or two behind the accredited investor platform. We have so much education to do on both sides, on the deal flow side as well as on the investor side. And we're as far out ahead of that as anyone. So we have a multi-factor test that we're applying to our deals that we're going to expose to investors. We believe that investors are smart enough, that the web is smart enough to self-underwrite. That's a radical idea. That's one that's born out of the true spirit and essence of crowdsourcing, and we're testing it. So we're going to take a little bit of a radical and different approach because we do view ourselves as inventors, and I think at this stage, to say that we have a standardized way of vetting a sponsor and vetting a project, I think would be, it's far too early to standardize in micro lending for assets that are participated in by non-accredited investors. So I think it's going to be interesting to see how that plays out. It was certainly interesting in the case of Lending Club and Prosper how that played out. They went through many cycles as they evolved as platforms, and we will too. It's early days. It's an enormous market, and there's a lot of learning to do. And that's where we are.
I want a follow-up question on that from you, Brian, because you just had some announcements, some news, and just recently in the USA Today. And I know you did it. You came from Harvard, actually, and then you did some background, and a lot of it come from technology side. But you're kind of waited behind the scene. I know that Julian's and other Carlo and other platform, they went out there and they did deal. You just kind of came over here in Georgia and did some test market. And now I think, do you see this the time, because I see you're active right now, your company it is. By the way, you're sponsoring this panel, so you're out there. And so what do you see? Do you see the momentum change?
Well, I don't know if it's a momentum change. I mean, as an entrepreneur, I think we would all say we see momentum changes, accelerations and slowdowns, and there are ups and downs throughout the startup cycle. So I don't get too caught up in any one of them. We have been working for over a year to get to this moment, and this is the moment when we have filed what is the most broad-based offering of truly crowdfunded securities to non-accredited investors in the United States. We started down that cycle. It covers 43 million investors who would be eligible to invest in the assets all over the country. And so that was our big announcement this week. And so, yeah, there's a rush of momentum around that. We're excited about it. But, I'm sure like any inventor, right, we're going to hit walls, that feel impossible. We have to break through, and we'll slow down. So count on that, right? We're figuring it out, and I think we're making great progress. We've funded 4 deals here in Georgia at a low scale. The numbers are not big. But the learning is enormous. And as an entrepreneur, I know that in any new market, whenever you're creating something new, what matters is the speed that you learn and the speed of iteration. So that's really what we're going for. The path doesn't have to be straight and up and to the right for us in order to feel like we're making progress.
Jonathan, do you have a comment on vetting sponsors?
Well, sure. I just responded to your question about vetting sponsors and projects in the crowdfunding arena. I think what's especially interesting about crowdfunding is the way that it breaks the paradigm of how information is supposed to flow between issuers of securities and investors. In traditional securities regulation, information is tightly restricted and filtered and controlled. If you're writing a registration statement for a company that's going public, you know precisely what kind of information has to be disclosed about your officers and directors, because there's an SEC regulation that says you have to disclose A, B, C, D, E, F, G, and you disclose A, B, C, D, E, F, G, and nothing more. And investors don't get any additional information. When the company goes public, there's no chat room where the investors are talking to each other and exchanging information, so that story doesn't get out there unless it's strictly prescribed by the regulations. Crowdfunding turns that on its head. In crowdfunding, investors are going to be talking to each other in chat rooms on the platform all the time, and if the promoter has a domestic abuse issue from 6 years ago, that's going to come out. So if you're vetting promoters and deals in a crowdfunding offering, you want to have a really well-scrubbed, well-heeled promoter and a well-heeled project, because any adverse information is going to come out. That's the power of the crowd.
If I can just add to what's being said at the table, we're living in the information age. The reason why crowdfunding today works is because you're able to mass distribute the information on someone's portal to the general population. So if you're living in this age of the information age, then you want to share that information with as many people as you can on your website, so that they've got the information to make the best possible investment on your website.
Jilliene, I want to ask you this question, because you're all about educating the investors, the new investors. What do you guys do basically with this? Do you do any kind of educating the investors, the investors? Do you have these chat rooms that investors talk about? What do you do then?
Yeah, so we spend a lot of time and energy on educating investors and also on vetting sponsors. But for us, education is all about content. It's about distributing great content and providing that freely available. You know, you've got a ton of folks who make a lot of money in the internet marketing business and they're selling content. And I'm still shocking to me that people pay for that content because it's all freely available on the internet, including on our website. But it's really interesting. You know, we're big believers that education is free. So not only do we have loads and loads of content, but I personally, you know, made it my mission this year to educate over 100,000 people on crowdfunding. I think I'm getting close already, and it's only April, given how much I travel and how much I just get in front of people to really talk about crowdfunding. Another thing that we do is we host webinars. And what's really interesting about the webinars that we host for each of our transactions is you'll get some really sophisticated real estate investors coupled with individuals who are making their first real estate investment. And these sophisticated real estate investors are you know, educating these new real estate investors because they're asking different questions. They're asking very technical questions, and we try and make it a point on a lot of our webinars to take a step back and explain. You know, we just did a webinar for the Hard Rock Hotel in Palm Springs, and ADR kept getting thrown around. And you know, the third time it was thrown around, I said, you know, let's take a step back and can you describe what ADR is? It's average daily rate for a hotel. But your new investor isn't going to know that. Where your sophisticated investor, you know, they can speak and walk and talk the jargon. So we try and do our best to explain that stuff. Real quick, just on the note of sponsors, you know, we think about crowdfunding as democratization of access to deal flow. And for us, that means that we're working with a select group of sponsors. We typically look for real estate companies who have already done over $100 million in transactions. So we are, you know, not allowing the general population to use the platform. I think it's a very different model than what Brian's model is. And we'll see, you know, what works. I think at the end of the day, both will work. I tend to believe that the crowd is also very, very smart and that you get a ton of diligence out of the crowd, but we do our own layer of diligence before we send it out to the crowd.
Speaking of that, Michael Bull is very great brand here in Georgia and a lot of different places. You have a great radio show. How many audience? About 20,000 on your radio show?
Yeah, just online there's about 20,000 a week, but on the air I don't know how many because we're on 11 stations.
11 stations. How many states?
In 10 states.
So speaking of a crowd, the real estate crowd, I mean, you had some interview with Jilliene, some of the experts. How do they feel? What did they order? Is it unknown territory for them? What is their reaction? You talk to them. You do those telephone calls, and what do they see that?
Well, that's a good question because commercial real estate people are slow to change, if you will. Like residential, for example, went online a lot faster. Commercial real estate people tend to want to hide the information. And there's a little pushback. So, you know, getting these sponsors to use crowdfunding, and I'm curious from some of you guys, you know, what are the advantages to a sponsor to use crowdfunding to raise capital, and how's it gone? How you get these real high quality sponsors to come online with you?
So, do you see them there for this crowdfunding or unknown territory? How is the reaction? Are they for it?
Well, I think it depends on the sponsor and how familiar they are with it, how comfortable they are with it, how comfortable they are with not knowing jack.
Yeah.
When you spoke out earlier, are you comfortable with having a lot of investors who you don't know who they are, or you don't know their experience level? So I think that's something that's changing, and I think it's going to change a lot. I think because, you know, when I interviewed Jilliene, one of the things that she brought up on our show was that, you know, people are more comfortable investing in the stocks online, you know, over the last several years than they were before. And I think it's going to become where they're more, they're okay investing in real estate. And I'd like to ask some of the panel, you know, as far as that goes, when these investors are looking at these projects, commercial real estate can be very due diligence driven. There can be a lot of details down to reviewing each lease and some things in the lease that can really control the value of an asset, things going on in the submarket, how much information is available, and do these investors, because a lot of them, some of them are investing a lower amount of money, do they just not want to know? Do they not want to talk to you? Do they want less information?
I guess I'll go first here because the three of us sitting at this table have different business models. Mine, again, is focused solely on debt. So you asked a couple of questions, which was, how do the sponsors think of putting their deals on the platform? So we're basically bringing lower price debt to the market than what people are able to get through regular lenders. We're also giving them easier access and quicker access because we're able to process quicker through some technology that we've implemented online. So in terms of the sponsors coming to the platform, every single sponsor I've spoken to that we've agreed to do a deal with has loved the platform so far. We again have a long vetting process for the developer, so we don't take any deal that comes to the platform. In terms of your question of what the investors are looking for, again, because this is debt rather than equity, we give a lot of information, but because it's a shorter term issue and the fact that it is a first lien position with a personal guarantee, they realize that they've got a little bit more security than they do if they were investing in equity. Not that equity is a bad thing, it's a great thing to invest in. Each equity and debt has their own position in someone's portfolio. So when we give out the information on the website, we like to make sure that the investor knows what they're getting, the rates that they're getting, and how much risk is in that deal. That's how. Yeah.
Carla, let me ask you a question, then just a follow-up question. How many months, how old is your company?
We've been around for 6 months.
How many deals you guys brought to table?
So far, we've done 10 deals. We just closed our 10th deal. We've raised $2.3 million.
Okay, thank you.
So I think, unsurprisingly, when you hold out a shingle and say that you can provide capital, people are interested in that. That's not surprising to anyone. When you start talking about what's involved in raising the capital and to participate with an immature technology to do so, some people fall away. Some people are more private and conservative. Some people are more practical than others. Others are dreamers. The people that have gotten very motivated around ground floor are people who see the potential for cultivating a following, who see a new source for capital that's not only different in terms of maybe its cost, and frankly, sometimes it costs more than their other options, but it delivers some very important benefits to them in terms of speed, in terms of what it's like to deal with us instead of dealing with a bank, and really in terms of its durability over time. Because if the internet is pretty good at reputation. So the people who we've been dealing with at this stage are really people who understand that. And so like any early adopter, right, they've got to go through the sausage making factory of being part of a new technology. But most of them, the ones who stick with us and really have been great early customers for us, are people who not only tolerate that, but are excited about it. And I think it's going to be like that. Hopefully, the business will start to scale. It's already happening for us. So we're already seeing that we're moving past that stage, but so far that's what it's been. But I think with this, it's only going to attract certain segments of people over time. It's like it's a well-known and well-documented technology absorption cycle that we're going through in this business. And I think I agree with Jilliene that I think it's going to grow very quickly, and that people are going to adopt this very quickly.
Brian, your company, Ground Floor, what is your business model under crowdfunding real estate?
Oh, well, we're a lender. We facilitate, we're a marketplace that facilitates micro lending by non-accredited investors to residential real estate. So we've done new construction projects that are townhome projects, and we've done some home renovation projects here in Southwest Atlanta, in the Capitol View neighborhood, if you're familiar with that, and the Adair Park neighborhood down near the Beltline in Southwest Atlanta. So we've, it's every time it's a short-term micro loan. It's a 6-month term or a 12-month term, and it's a loan. You know when it's going to be paid back. You know what the interest rate is up front, and there's a first lien position or a second lien position usually on those products.
And we should say that for our audience at home that this is for intrastate, just in the state of Georgia.
Yes,
Georgia
that's where
exempt.
we've been piloting.
So
We've been
not
piloting here in
anywhere,
Georgia.
just you're doing
So,
this thing in Georgia.
one reason that our numbers are proudly not scaled yet is we came to Georgia to do Georgia projects from Georgia investors, and that's why we're so excited about the news this week, because now we're expanding to nationwide. We can take projects anywhere in the country, and we can take investments from 43 million investors across 6 states.
Thank you. Jonathan, what do you think about all this? Because I know you write articles, and I'm an advocate about, we had some issues about intrastate, and what do you see these crowdfunding works in the real estate? I know a couple of your articles I read, and you're kind of an advocate about this intrastate, and
Sure. So, for me, what's exciting is the economics and the sociology behind crowdfunding, that it really breaks up the information flow and turns up the paradigm of securities regulation that tries to constrict information. I'm not exactly sure which of the various legal methods of offering securities is going to become predominant. You know, Ground Floor so far has used the Invest Georgia exemption. They now have a qualified offering that's going to be in multiple states, which is a different securities approach. Realty Mogul has been doing Regulation D offerings where all the investors have to be accredited. We've got some news out of Washington this week that the SEC still hasn't given us rules for interstate crowdfunding under the Jobs Act, and one of the key sponsors, Representative McHenry, is saying that we now need to amend the Jobs Act to fix the crowdfunding rules that haven't even been issued yet. So I think the future, as far as the legal pathways to crowdfunding, is still very confusing. But the great promise of crowdfunding is the way that it, whether you call it democratizing deal flow or bringing high-value product to the masses in a way that it hasn't reached before, is very exciting. And I, as a lawyer, I like to be solving complicated problems that no one has ever solved before. That's what gets me excited in the morning. And I'm sure there are going to be lots of complicated problems to solve in crowdfunding. And whichever pathway it takes, I think it's going to be a lot of fun to get there.
Speaking of a deal flow, I'm going to change the subject and go back to what you mentioned about these mini houses, and all this, trailer homes. And I know some big players, I mean, by the way, you guys are big players too, as far as I know, in real estate crowdfunding, and one of the frontiers, and rule breaker, groundbreakers, and I have to commend you, because I can see in the past 2 years I've been in the crowdfunding, you guys, your companies, call those Jilliene, Brian, you guys are, kind of a revolutionary. You come to this and you put your head, right there, and I have to tell you. But speaking of that, I see a lot of big players are coming to this market, like the Carlisle's or Carlton Groups, and they're kind of focusing to those deals that is like trailers. They're looking for the millionaire next door, kind of a people actually to investors. What do you see about that? How do you see about this thing changing? Are there these people? They don't want to just particularly put some money in some Manhattan high-rise. They're looking for those deals near their community. Do you see it like that? What is your?
Yeah, I mean, there are some institutions coming into the space. I think that, the challenge there is that they don't have a lot of focus and emphasis on technology. So I'll share a specific example without sharing who it is, but I think you'll be able to figure it out. I went to this website. I got, multiple links from it when they launched recently, and they said, have you seen this? Have you seen this? So I go to the website, and they're collecting social security numbers, they're collecting account numbers, they're collecting routing numbers. Well, they are not on a secure server, and they are not PCI compliant. And we didn't launch before we were on a secure server and PCI compliant. We didn't even take passwords until we were. And there are a lot of these companies that, they think they're compliant, they buy out-of-the-box technology. I'm a big believer that this is a financial services business. It's not a technology business, so I'm kind of, contradicting myself on this point, but it still is a technology business, right? Technology is a core competency of all of our firms. It has to be. The other big difference that I'm seeing with the institutional players is they're only raising capital for their own transactions. So they're calling it crowdfunding, but really it's just a website where they raise money for their own deals. So it's a little bit different than sort of an open marketplace or even a curated marketplace like we run. But there's going to be a lot of interest in the space, and I talked about this as far as adoption. This is not going to take 8 years. It's been, we've been in business a year, and already we've done tens of millions of dollars in transactions and hundreds of millions of dollars in property value. And that was unheard of in sort of online capital markets a couple of years ago. So I think we're going to continue to see big players in the space. I think that we're gonna see players that we haven't even imagined today. They're gonna enter the space, but that's the exciting part about it. And as Brian mentioned, it's an $11 trillion industry. There are going to be multiple winners in this space. There are going to be multiple companies to do business with, just like there are tons of online broker dealers, right? E-Trade, Scottrade, Charles Schwab, all these broker dealers. And at the end of the day, clients are going to choose where they want to invest. And for that reason, customer service is really, really important to our company. Client service, making sure that people can reach a human being. I mean, I told the story of Jack, but there are other people who want to talk to people. It just depends on who the client is, and I think that's a big part of crowdfunding.
Brian, who's your customers? Who's your investors?
Well, it runs the gambit. You see a lot of people who are sophisticated real estate investors have maybe participated in hard money loans before and know what they're doing. And then at the other end of the spectrum, there are people who watch house flipping shows on HGTV, and they think, okay, here's a way that I can get involved in the market. We've seen a lot of people, people who like Lending Club love Ground Floor, and they should, because it's pretty much the same thing, just with an asset backing the loan. Instead of unsecured credit card debt, it's a secured loan, to a real estate developer. So we've really seen a broad cross section, and that's kind of the point.
There's a great diversity here on options, and you talked about, Jillian, there's going to be a lot more. So what are some things that the investors, these online investors, should think about, and what are they thinking about when they're looking at all the different platforms, and then within those platforms, the different investments that are out there, be it debt, equity, different property types? What are some tips you would give to those investors?
Yeah, so a big one is transparency and accessibility. We were early on the scene, so we have a lot of investors, but a lot of those investors then subsequently went on to other platforms and invest with other platforms, and we get no less than an email a week that says, we wish we had just stayed with you guys and only done business with you. It's not fun working with other platforms. Not all other platforms, right, but certain other platforms. And a big piece of that is because we're all startups ourselves. But one thing that I tell a lot of investors is, look, we're startups ourselves, which means that not only are you taking risk in the real estate, but you're taking some counterparty risk in the crowdfunding company. These crowdfunding companies go out of business, that's going to be very, very scary, and they will, right? They will, and as the CEO of this firm, it's how do I stay in business? So not even how do I grow, just how do I stay in business to service the 60 crowdfunding transactions that we've already done, and for us that meant go raise big amounts of venture capital money. It's why we've capitalized the company with $10 million in operating cash today. It's not that we needed $10 million in operating capital, but it's that I, coming out of a fiduciary background, didn't want to be in a position where we didn't have enough cash to keep the company going. So I think that is the crowdfunding platform well capitalized is a really, really big question that investors should be asking themselves. I also think that another question is the crowdfunding company regulated? Are they a broker-dealer? Do they have people with securities licenses? I've got to believe we might be the only crowdfunding company in the country where our CTO, our Chief Technology Officer, has a Series 7 and a Series 63. And people ask me, he's not selling securities. Why would you, make him go through the pain and suffering? And it is pain and suffering. I did it myself. And we're building regulatory compliant software. So I think that you want to invest with a crowdfunding company that's well capitalized, that is well regulated, and also that has pillars of trust and transparency, and you can access people at the company. If you're calling into a crowdfunding company and you don't get an answer, that's not a company you want to invest in my opinion.
Yeah, I should say, I was there last year in April of 2013 that you won the $500,000 seed investment for your company, and so we come a long way. It just recently closed $9 million. So this is a fast evolving business, so and you guys are raising. And Carlo,
And let us be the first to say thank you, Jillian.
yeah, it's good for me to say. Yeah, I was actually there at that.
You've got a lot of other VCs who want in now, so it's been validated.
Exactly.
We're all getting chased
Thank
now,
you.
thanks
Yeah,
to
no,
her.
but you're
thank
that.
you.
But that's good. So then that's a lot of hard work when you were one of the frontiers, and along with Brian and Carlo. Carlo, your business model, you come from a real estate family. You've been doing a lot of investment in this. What is it? You do your different model. You put some investment. Are you sharing the wealth?
So actually, I invest in the deals that come onto the platform. So when developers come to me and say, I need to borrow money, we actually underwrite that deal and lend the money before we even put it on the platform. So that's through a pre-funding facility that we have internal to the company. That obviously allows us to pick the best deals, to pick the best developers, and on top of that, we get to give the best rates back out to our investors because we negotiate the best possible deal at the point in time when the deal is made from the beginning. It's a great facility. People are loving us. We're actually in talks with a few different banks to give us a multi-million-dollar line of pre-lending dollars.
A lot of investors who invest in group investing in real estate in particular through TICs and through other ways have had issues and sometimes with the exit strategy, with selling the property. What do you tell investors related to when they want out, when they want to sell, about exit strategy?
Anyone else? No, I mean, again, because mine's focused on debt, so these are relatively short term. I mean, the ones that we've done so far have been 30-day to 1-year notes. So people are just getting paid back. We've already paid back 3 deals out of the 10 that we've done. So right now, there's no secondary market per se of selling, and there's some rules around that as well. But in the future, there'll probably be a secondary market out there so that people can transfer their rights and ownership, whether it's in equity or debt, and that'll be a great day for the entire industry, because as the opportunity becomes to liquidate one's investment at the point in time when they may need it, will allow more dollars to come into the industry.
Yeah, our message is this is an illiquid investment. There is risk. You should be prepared to hold for the long term. This is not dinner table money. And I think anybody sharing a message that is different than that, run. I, in fact, believe that there will eventually be a secondary market. I would never tell an investor that, because that indicates to an investor that there may be a secondary market when, who knows, right? And that opens up risk, not only to the platform, it opens up risk to the investor. And, you know, I would never want to put an investor in a position where they think that they're going to get money out when they're not. Like Carlo, we've had about 17 of our transactions have gone full cycle, but we have other transactions that we intend to be in for 5 to 10 years. And it is illiquid, and part of the beauty of crowdfunding is that they can invest a smaller dollar amount in an illiquid transaction where maybe they didn't have the capacity to invest larger than that historically.
Who make the decision to sell all these things?
The real
Get
estate
exit.
company.
They
Yeah.
do?
Yep. The real estate company who we're partnering with will make the decision to sell. They've got, you know, a business plan and a business model, but I'm a big believer in not trying to time the market. If we say you have to sell in year 5 and we're in a down cycle in year 5, that's going to be bad for everybody. So the real estate companies that we work with, we mandate today that they put capital behind the transaction. So there's alignment of interest between the real estate company and the investor, and that real estate company is making that determination of when is the proper time in the market cycle to sell.
So we should say that you're all under the accredited investor 506C for
Right.
audience at home. So could you elaborate on that?
Sure. So an accredited investor is a high net worth investor. They typically have either a net worth over $1 million, excluding the value of their home, or an annual income over $200,000. A couple of other requirements, but those are the big ones.
Thanks. Wayne, do you want to add to that? Jonathan?
Jillian, of course, had the definition exactly right. One of the key things, though, for the 506C offering is that the offerer has to verify the accredited investor status, and that's something that often becomes a challenge for some of the other platforms. For the Reg D offerings that we all grew up with, you simply signed a piece of paper certifying that you were accredited, that you met the income or the net worth requirements, and that's good enough, and that was good enough and still is good enough under Rule 506B for the offerings that don't advertise the way Jillian's do. For the 506C offerings, where there's advertising, the issuer of the securities actually has to verify through one of several different means the accredited investor status of the investor. And that, frankly, is still a bit of a challenge for the market, because one way of verifying status is have the investors send in their tax returns. Well, nobody wants to do that, and that's not convenient. The other alternative is to go to some sort of third-party accreditation service, and a lot of those folks are startups themselves, and their models are still developing, and I think that's one of the things that the industry is going to have to perfect as it becomes more mature.
Speaking of that, the last year in September when the Title II passed and when everybody, we had some phone calls actually, they said, are you guys going to put a big billboard advertisement around? Do you see anybody in the industry? Is anybody doing that? Is anybody doing on that Title II? And just for the question for the whole panel. Julian, do you do any billboard advertising for 506C?
We just launched Hard Rock Hotel Palm Springs, and actually that was our first 506C, and I think all of Carlo's offerings are 506C, so he can probably talk to this too, but we went out with a huge media campaign. We had 110 million impressions on the Hard Rock Hotel Palm Springs that we can measure, and more than that probably that we can't measure. So that's crazy, right? That's a third of the U.S. population has seen some element of this, you know, according to the media and the way that, you know, press gives numbers. So we didn't have a billboard, but, you know, I did Fox Business Television where I was talking about the offering. We were in USA Today, we were in the Wall Street Journal. I mean, tons of publications that said you can go to realtymogul.com/Hard Rock and make an investment in the transaction. And that's a fundamental shift to the way that securities rules worked for the last 80 years. So it's been exciting.
So there's a lot of things happening since
Tons.
the old 70 years rule, the Title II, so we see
Tons.
that a lot. Speaking of that, I wanted to just one follow-up question on that. A lot of people are getting this hotel, you know, crowdfunding. Is this because of they get perks? You know, they stay in a hotel for 1 week. It's like a timeshare. What is going on here?
Yeah, it's interesting. I think we've actually done the first. Well, no. Actually, there's another firm that's done it. That's done something similar. But this is the first for us where we've matched an investment opportunity, which is a real investment. The investors are getting cash flow off the hotel. They're getting appreciation off the hotel, but they get perks too. So they get 8 discounted rooms, 25% off rooms, $50 food and beverage credit. They get free cabanas at the pool. You get a bottle of champagne when you show up at the hotel. You get a really cool owner's card. It's the first time that we've done it. It's an interesting test. It works really well for hospitality because you can drive revenues to hospitality by having people using the hotel. And what's interesting is Palm Springs is a major vacation destination from Los Angeles and Silicon Valley and some other places in California. And we now have all of these owners in the hotel who are literally going to go on vacation and say, I own this hotel. And it's the first time that's been done, so it'll be exciting. But yeah, I think some people are because of the perks. They're interesting.
Am I going to be Airbnb of the crowdfunding to come up stay in some of your areas and say I can stay here?
I don't know if any of you are going to vacation down in Southwest Atlanta.
But you're expanding. You're not in Atlanta. You're
it's
expanding,
true.
yeah.
It's true, but we like that asset class. And I think we will, I like to say that, we're operating at the sort of base layer of the real estate market, and we're comfortable there. We like that. We like the way to underwrite that asset class. We also have been experimenting with advertising. That's one great thing about what Georgia has done with its legislation here. It has allowed us to learn what the cost of customer acquisition is. We know elementally what it takes, how much money it takes as an online marketer to acquire an account. We know how much to expect from that account, at least in the early going. We have to interpolate a little bit to see beyond our couple of months of funding transactions exactly how that plays out. But as an online marketer, and we're online marketers. It's one of the things we do as a company quite well. We are, I think that's this component of how you take something that 98% of Americans cannot do, which is participate in a private placement. Legally, they're not allowed to do it in most cases. To help them understand that they can't do it, and then educate them about what it means to participate. And then encourage them that you're not just selling them a bridge on the internet, that there's actually, there are actually protections in place. I agree wholeheartedly with what Jilliene has said about being regulated companies and how good that is to be legitimized. But I think, the ability to go out in the early stages of the market and to acquire people online through advertising here in Georgia has been great for us, right? It's one reason that I think of Georgia as a hotbed of crowdfunding.
Carla, you do a lot of 506c, and so what do you see? What kind of deal? How does that be done?
Yeah, it's great. I mean, we're using the internet. Like I said, it's an information tool, so we're able to put out there that we're doing debt deals and debt offerings, and doing some PPC campaigns and emailing different crowds, and it's been a fantastic way to get our name out there as a brand. And people are coming to the site and hearing about us and seeing about us, and done some press releases, etc., about different deals that we've done. It's really been nice to be able to use this new regulation, and in a way it's its own technology, I guess, that's allowed companies like ours to form. It's a great space to be in. I love crowdfunding. I've done a deal already in the state of Georgia. We did a $103,000 loan to a lady who is in the real estate space, but we lent the money to her because she was buying the home and then leasing it to a veteran who had a VA certificate, and he couldn't afford to buy the house just then because the house needed to be remodeled and someone needed to live in it. So we're helping the state of Georgia and other states too by having 506c rules in place, and it's a great thing to do. We like to call ourselves rebuilding America.
Okay, so speaking of America, Michael, have any questions? We're going to take about 5 minutes. We have 2 more minutes, and we're going to take some questions from the audience, actually.
Okay. Jonathan, I'd like to see if you could share some legal precautions for people involved in the crowdfunding space, real estate crowdfunding.
Well, that's a really big question. As one of those questions, I like to tell clients that every legal question you could possibly ask me has one answer, and that is yes, with enough money and information. Legal precautions in the crowdfunding space, well, it's a complicated area. The very first thing you need to do is hire a lawyer who knows the space, who knows crowdfunding. The folks who have gone out there and have tried to do this on their own have just created a mess, and frankly, that doesn't do well for anyone who's trying to build a long-term value proposition in crowdfunding the way everybody on this table is. So I don't know that there is one piece of advice I can give other than get a lawyer who knows what they're doing, who can be flexible with you, who can solve problems creatively, while at the same time keeping you well inside the lines as you get your deal done.
I come from regulated businesses too. Telecom is a regulated business. I was in England. There was an act, the 2005 Gambling Act, that was meant to foster the remote gaming industry, and I was part of a venture-backed startup there that was a regulated industry as well. And I think, we thought of the regulatory landscape and the regulatory roadmap is one of the first problems that we needed to solve a year and a half ago when we started the company. And my co-founder, Nick Bargava, was part of the group that authored Title III of the Jobs Act, and he was an important contributor to that. He's one of the leading thinkers about how to use existing regulation to, to open private placement investment to more people, but to do it in a way that's safe and that's regulated. And I would say, get you a co-founder who helped write Title III if you're coming into the business. That's my advice to you. It's the smartest move I made.
Have a good
very
attorney.
early on. And we also hired a great attorney. I mean, we hired an excellent law firm that has been working with us on this current offering that we're announcing this week. But it's a lot of legal work. There's a lot of legal innovation here. There really is. And it's not just a technology play. It's not just a financial services play. It's also a regulated industry, and it needs to be treated that way. That's part of. That's really one of the pillars of it.
And speaking of that, that is my studies have done in the past 2 years. By the way, in all this information, this broadcast is going to be in the CrowdFund beat, which is we have about a year and a half, and all the information, the past interview or the articles over there, the CrowdFund beat. So we see a lot of trends happening, a lot of good things happening. But one thing I always share, with a lot of you guys, how are you going to guard that? How are you going to guard this industry from somebody to come out there and start something, haywires, and then after all this good publicity, we start getting some sort of kind of a negative news. I mean, so are we going to kind of guard this industry? How is that going to happen?
Jillian said it earlier. This is a regulated industry, and it's fantastic that it's regulated. I hope they bring more regulations, to some degree into the industry so that people don't get defrauded in the space, and that they keep rules and regulations in play that keep companies legitimate, offers legitimate, the people that are running the companies legitimate. And so as long as that continues to go on and they continue to put rules in place that allow companies like ours to be created but yet regulated so that no one can do anything bad to the investor, I think it's a great position to be in. I want to be more regulated as well.
Julian, you want to be more regulated?
Yeah, I don't mind regulation. I mean, it's a pain and it's expensive, but it's a cost of doing business. I think that it's going to happen. There's going to be things that happen in the industry, and I think that it's up to us, right, as the CEOs of companies like this, to do the right thing. It's shocking how hard it is sometimes to do the right thing, but I think if you do the right thing, you're transparent, you act swiftly and you act aggressively, there's always the opportunity to do the right thing. Now, the big challenge for platforms is going to be, do they have the capital to do the right thing? One of the reasons, again, we ran out and raised, big VC money and gave away a chunk of the company is because we wanted to have the capital. At the end of the day, it's believing in the CEOs, and not just the CEOs, but the leadership teams at crowdfunding platforms to do the right thing when things don't happen the way that you expect them to.
But you said that I heard you turn away some deals, not all the deals that they go through. So
we turn away the majority of transactions that we see.
So what are the deals? Are they just not fit to your platform?
Yeah, a lot of what we see is ground-up development. We don't invest in ground-up development today. We're very focused on cash flow, the sort of you've got money concept that I talked about. We see a lot of real estate sponsors who want to raise capital from the crowd that we don't think have the requisite track record to be raising capital from the crowd. We don't want to be funding real estate entrepreneurs and real estate sponsors who haven't learned with their own capital. That's not to say that we have a problem when a real estate entrepreneur is given a property back. We like actually sometimes that they've learned that lesson on someone else's capital, but we're looking to work with well-established real estate companies.
Jonathan, regulation, good or bad? More.
Good regulation is good and bad regulation is bad. But not to be too flip about it. The whole premise behind crowdfunding is changing the paradigm about how information flows, to let more information flow rather than less information. What the flaw is in the 1933 Act, the Securities Act of 1933, is that it's an attempt to restrict information in the information age. Fundamentally, that doesn't work. It creates a conflict. I think everyone would welcome regulation that made crowdfunding platforms and crowdfunding players more transparent, more secure, and accountable to their investors. Those are all things that work well. Things that try to constrict information, mandate the flow of certain types of information, control the flow of information, I think those are all fish trying to swim upstream, and it's not going to work. You think about what are the things that government is good at? Well, government's good at putting warheads on foreheads. Is government good at controlling the flow of information? Well, we spent almost $1 billion to build a website in healthcare.gov, and it was not the most successful new website ever.
That was the Canadians, wasn't it?
I don't know. I don't know. I think government does things well when they make rules that are clear, transparent, and understandable, and they do less well when they try to constrict the flow of information.
Yeah, well, I should say that, us in media and the conferences and other thing over there, we get a lot of PRs from every day. Somebody's out there in new portal. But, I know Julian, I know you, Brian, I know you, Carlo. I mean, we have to do our job to make sure that the people coming, to the market, that they've been legitimate. And, I know you guys been working so hard. That's what I'm very glad to be part of this thing, seeing, grow. So we have to do our job to just not anybody comes over there trying to get them publicized. And we have to be careful with that over there. So, Michael, do you have any question?
I guess one question I'd have, since this is a real estate panel and a crowdfunding event, is what is the difference between a real estate crowdfunding and other types of platforms? I mean, are there some advantages or disadvantages? I mean, for instance, you've got a hard asset, right?
I mean, that's what we liked about it unlike Carlo and Jillian, we weren't real estate people when we stepped into this business. We become real estate people, learning all the time. But we like the fact that there's a tangible asset, right, that people can relate to. And there aren't really good vehicles for investing in real estate. I mean, if you think about it, there are good vehicles for investing equity in companies, more or less good depending on your point of view. There isn't that in real estate today. So I think it's different because I think that real estate investing can be difficult to access. I think it's a tangible asset, and I think it's an inherently local market, right? I think you can drive by what you own or what you're lending toward, and I think that's unique.
I think to what Brian said, not only do I like real estate, I love real estate, right? I mean, it's just a great asset. Back in the day when I was a kid, people used to say, listen, when you go buy real estate, you want to go walk up to the building every day, go, hello building, how are you? And it's there, it's something you can see, it's something you can touch and use. And every single person in the world, or many of the richest people in the world, are people that made their money in real estate. So by allowing crowdfunding to take its piece of the real estate industry, allows the general population that didn't have access to it before open up and make their investment into real estate. And again, to what Brian said, it's expanding the reach. So previously, 100 years ago, people who had real estate was all local villages, little towns. It was you owned what you owned in your local neighborhood. Now a guy in California can own a piece of property in New York, and soon international investors will be coming onto the platforms too. Guy in China will be participating in a deal in Texas, and it's just a fantastic way for capital creation to be formed in America.
Julian, the VCs love real estate. Obviously, they love you.
They don't all love
or your
me.
company, both.
It only takes one, right? As they
Only
say-
one loves
as
you,
they
right? The
say
other
in,
one.
in the VC world, the others are probably not so happy today. But for me, it's cash flow. I love cash flow, and you're not going to get cash flow investing in startups. And I think that's one of the reasons that real estate's going to be the biggest asset class in crowdfunding.
Well, you have any other questions? If anybody have any question, we're going to wrap it up. Go ahead.
This is a short question just for Brian. I kind of understand the business model pretty well, but I think what takes the downside. Let's use the example of a home remodel microphone through, I don't know, 6 months, 9 months. I'm a big fan, but I do play kids. What happens when it goes wrong? Let's say it doesn't do the remodeling correctly or properly, or some kind of problem. Now you've got that first or second lien. But if going down to remodeling, I kind of don't get what your enforceability strength is when something goes wrong.
Ground floor has the same prerogative that a bank would have in first position. So we can move to foreclose on the property, and we can take it and liquidate it and return the what's left to investors.
Have you had to do that?
I don't want to become too good at that. And no, I haven't had to do it. That's not to say that we won't have to. At some point, we are absolutely prepared to. We know how to do it. Fortunately, in our asset class, it's well understood how to do it. Fortunately or unfortunately, if you've been the subject of a foreclosure, it's quite unfortunate. And different states have different laws about it, of which we're aware. So I think there are, the important thing for us is to maximize recovery for our investors. And that's what we do.
Just a wrap-up question. Anybody have 2,000 next year, 2015, where is the real estate going to be with the crowdfunding? Quick. Just a.
It's going to
Give
be
us-
even more firmly established than it is today, and firms like the ones represented here today are going to be very busy getting deals done.
Jillian, what do you see?
Well over $1 billion in transactions.
Wow.
Wow. There are going to be a lot of platforms doing a lot of work in a lot of different subsegments of this market. It's just going to be an exciting, I think the next 18 months particularly is going to be very exciting.
Paulo?
I've been at a few crowdfunding conferences with these two folk at the table here, and so people are saying there's going to be 100 to 200 different crowdfunding platforms out there just for real estate, and that's quite shocking to know that that many people are coming into this space. So Jillian's $1 billion number, yeah, hopefully it is. Great,
It's good
for everybody.
Michael, you think there is a marriage between the real estate world and the crowdfunding?
Yeah, I think it's going to grow substantially. I mean, you think about a small investor getting to use the experience and the know-how and the reach of a large sponsor that knows what they're doing with property. So if I'm a small investor, I can use that experience and have that work for me. Having said that, I had a question from a listener last week, which property type that I thought was going to escalate in value the most over the next 2 or 3 years. And I prefaced that answer with, it really depends on the market, the city, the sub-market, the actual asset, and I think most importantly, the sponsor and how good they are at managing that aspect and that property and asset managing it. And the answer to the question was, my answer is industrial. I think industrial is going to grow in value because of all the online sales and that sort of thing.
So we see the millionaire next door is going to come jump into this market, are they?
Yeah, I think they are, and I think it's going to open up a lot of other business around it as well. I think it's going to grow a lot of businesses like someone was telling us, our radio show has become much more popular because people are going to be looking for areas where they can understand more about real estate, and they can go read blogs and articles and videos and understand, market updates and what's going on in the sector, what vacancies and things are doing around the country.
Okay. Well, Jillian, Jonathan, Brian, Carlo, Michael, anybody else? One more question? Go ahead. We take one more question, then yeah, okay, go ahead.
Yeah, I think I brought that up, this idea of counterparty risk on the platforms or other lenders or other sponsors we're doing business with. I don't see the returns being any different because they can't be, right? Unless you're charging an underlying return that is more expensive to an underlying borrower or to a sponsor, that means it's a riskier deal, just the deal itself. So I wouldn't say that the returns are any different for that, but I think it's something that investors really need to watch out for. There are some platforms where that risk is lower than other platforms.
Well, I should say thank you very much. I know you guys are busy and the deal is flowing, and so it's just wonderful news, and all. We appreciate you giving us your time to people at home with the crowdfund beat and this crowdfunding USA, which is great. We share all of your knowledge. Hopefully we see a lot of great things happening. We go on that wow moment. And for audience at home, this is Sydney Armani with crowdfund beat. It is Silicon Valley and here in the great state of Georgia, and we would have had with crowdfunding USA saying so long. Thank you very much.
I'm interested in hearing about your regulatory.
It's novel.
We're going to take about 10 minutes break, then we're going to have an equity crowdfunding panel.